Stocks continue their slow but steady climb in slim New Year trading. Auto and IT ekes out gains while utilities and healthcare are the big drags. Mid-caps are lagging.
Tata Motors expects a pickup in all segments of the CV industry in Q4 after reporting a marginal year-on-year dip in sales but a sequential rise. Ashok Leyland too turns in a strong showing, beating expectations.
Maruti Suzuki tells CNBC-TV18 that the auto major is firing on all cylinders with strong growth across segments and geographies after posting its highest monthly sales ever. The PV major is set to reveal its EV plans at the Bharat Mobility Global Expo.
The Microfinance Industry Network, the associations of microlenders, defers the implementation of advisory on limiting industry exposure to 3 lenders per borrower to April 1st, 2025. This gives the sector more time to correct its credit exposure. Hello and welcome to Halftime Report. I'm Nigel. With me is Hormuz. Well, the markets have started off the year on a very solid note. We have the weekly expiry that will play out. And the good news today is that we have seen that the Nifty has made a higher high in comparison to yesterday. We're getting closer to around the 24,000 odd mark. And if some way the bulls can get past the 24,000 odd mark, I'll tell you what, we could be in for a very good last sort of trade. For the time being, though, looking at the screen, the odds would favor that we stay in this range within that 24,000 odd mark. But in terms of low volumes, anything is possible, and we could see some volatile moves as well. Big movers in the last 1 hour or so have been stocks like Varun Beverages, where there's an initiation report. And also we have Jubilant Foodworks, where you have Jefferies coming out and saying that they believe the worst is in the price and they're sounding optimistic on the prospects of the company. So that's why both those two have recovered from the low point of the day. Hey, Hormuz.
Good afternoon, Nigel, and it is indeed turning out to be a very good afternoon for the bulls. It's another high for the index as of now for the day. 23,960 is where the Nifty is right now, and you are heading towards that 24,000 level, which has turned out to be with some bit of a pain point for the index over the last few trading sessions. But the stock of the moment, though, is Eicher Motors, and if we could pull that up, and that is now at the highest point of the day. Sales numbers came in just a few minutes ago, and look at that move. 6.5% higher now. The overall sales were up 25%. The sales for the 350cc vehicles were also up 25%. More than 350 were also up 25%. But the exports almost doubled on a year-on-year basis. And you can see that on the stock price move as well. 6.5% higher for Eicher Motors. And the stock, mind you, is at a record high. And Nigel, you'll be a happy camper with that.
Well, that's right. I've come in on a Royal Enfield this morning, as I normally do. But let's get to some top buzzing stocks of the day. And let's focus on the financial space first. Kotak Mahindra Bank, Bajaj Finance, both of them are trending higher, as Citi has opened a 90-day catalyst watch for both these two stocks. Abhishek joins us to give us the rationale of that. Abhishek?
Well, Citi has opened a positive catalyst watch of 90 days both on Kotak Mahindra Bank as well as Bajaj Finance. On Kotak Mahindra Bank, they have also upgraded their recommendation to buy from hold, increased the target price to 2,070 from 1,940 that they had earlier. They said that there is sustained loan growth momentum seen in the bank. The personal loan with improved delinquency has tended to gather pace for Kotak Mahindra Bank. They say that the credit cost expectations of being on the higher side is already baked into the valuations that the bank is commanding. So tweaking their medium-term growth with relatively low beta or low impact on market cap, they have revised their target price. So they are also wary of the fact that lifting of regulation restrictions by the regulator, that is RBI, will be a key trigger for the bank. Bajaj Finance, they have a buy recommendation target price of 8,150 per share. They say that the post the credit cost guidance been increased by the management post the Q2 numbers for FY25. Q3 may see a slight increase in credit cost to a range of 2.2 to 2.25% as the company has initiated risk actions by cutting segments and pruning their exposure to risky areas. Despite rising stress and rundown of captive two-wheeler and three-wheeler financing, they expect AUM growth to be around 27% YOY and 6% quarter-on-quarter in Q3 of FY25. So with cost of funds peaking peaking in 2Q and growth being led by the high-yielding segment. They expect net interest margin for the lender to improve anywhere in the range of 3 to 5 basis points in the current quarter. So they say that management transition update will be very critical given the fact that their assessment is leaning more towards the executive role of Mr. Rajiv Jain at Bajaj Finance or Bajaj Group as well. Back to you.
4.5% higher on Bajaj Finance, a very strong start to the year after what was a very subdued and underperforming 2024 for a stock that has been a wealth creator over the last decade is Bajaj Finance. Abhishek, thanks a lot for that. But moving on from one buzzing name to another, and the spotlight is now on Jubilant Foodworks. The management met with some analysts and shared some highlights on the business. Vinny is joining in with the key takeaways of that and what brokerages have to say on that. Vinny.
Good afternoon. So yes, a lot of highlights coming in. A few analysts is what they've met. Now, compiling all of them together in terms of the takeaways. Firstly, what is the main takeaway? That the company is remaining focused on growth rather than margin expansion. As of now, the same saw sales growth. They expect that, analysts expect that could actually start seeing an improvement coming in and expand to mid to high single digit is what we could expect that to be in the same saw sales growth. Margins are expected to have bottomed out in the calendar year 24 and should start improving. So 2025 expected to be a better year in terms of at least some bit of the margin improvement that one could watch out for. Now, the company is also doubling down in terms of the dominant side of the business and prioritizing volume growth over there. Popeyes, their focus is on profitability and recalibration of store expansion model is what they will be looking at, and strengthening their global footprint, especially in DP Eurasia, is something that will be driving the growth for the company going forward in terms of long-term value, and that is what analysts are positive on. Now, three pillars and priorities also that the management highlighted is in terms of scaling Domino's further, expanding Popeyes, as well as fostering to team culture and to be future ready is what their focus is going to be on. On the back of this, we have brokerage note from Jefferies coming in, who's maintaining a buy target price of 1,000 rupees. HDFC Security also maintaining an ad rating target price of 690. Kotak maintaining the reduced rating, but they've increased the target price from 540 to 690. So keep an eye out on that. And Motilal Oswal maintaining a neutral rating and a target price of 800 rupees per share.
Thanks a lot for that, Vinny. Well, let's focus on Coal India. Coal India has underperformed the Nifty in the past 6 months, and its operational performance, both for December as well as year to date, well, it's been weakish, with only marginal growth on production as well as on the dispatches front. Axis Capital, well, they have come out with a note. They acknowledge softness in offtake and they expect just around 2.5% growth in FY25 on volumes, but that moves to around 6% growth in the next two fiscals, as they are expecting there will be some kind of improvement in power demand. So they've gone ahead, they've upgraded the stock to buy from add, but they've cut the target price by roughly around 10%. This is because they've trimmed down their volume estimates, which has resulted in a 5 to around 7% cut in the EBITDA projections. The key reason for their bullishness is attractive valuations. So Coal India, remember, according to their estimates, it trades at around 7 times odd PE, 4.5 times EV per EBITDA, and 7% dividend yield. So valuations, they believe, can support the stock. Now, the reason for the soft operational performance for Coal India this year so far has been the weaker power demand. That's just up around 4% year to date. And also the share of captive coal in India's total coal production, that's risen to around 18.5% from around 15.5% in FY24. Now, Axis Capital says that the EBITDA growth will be muted, but the free cash flows are expected to be robust at around 15,000 crores per annum, even though earnings growth will be muted and also they have elevated capex. So put everything together, Coal India, which if you pull up a chart of Coal India as well as the Nifty in the last 6 months, you'll see that it's been a relative underperformer. However, some part of the street like Axis Capital believes that things could look up from here on for them, and maybe in fact at these sort of valuations, Coal India could get some kind of support. So we'll keep an eye out on this, whether it will shine back in 2025.
Oh, very interesting. You know, the Nifty PSE index had made a record high on the 1st of August, and since then the index is down 20%, and Coal India is among the top losers during that period, is having corrected almost 30%.
You know, it will make sense, Hormuz, to pull up maybe the Nifty as well as Coal India in a single plate. You know, that will tell you the kind of underperformance. If you look at it in the last 3 months, or even, in the last 6 months or so, it's been a big underperformer. It had a one-way run to around 500 rupees, and from there, it did see some bit of selling. So let's see how things go.
Whether valuation comfort does come to the rescue for Coal India in 2025, that remains to be seen. There you can see the Nifty down almost 1.5% over the last 1 month. Coal India though down 9% during the same period. But time for a short break. On this note, on halftime report, more on the markets and specific stocks on the other side. Stay tuned, we'll be right back. Welcome back. 23,960 is now where the Nifty is, and there are plenty of movers in the broader markets. We just shed the spotlight on the microfinance space in the morning on Chartbusters. We also spoke to the MFIN CEO, and Credit Access Grameen now is trading with gains of around 8.5% after that deferment on the cap of the number of borrowers by around 3 months. And that is at the highest point of the day. Is Credit Access Grameen 8.5% higher, around about those levels of 965. Sundaram Finance too trading with gains of around 8.5%. Raymond has made a move today, that's 6% higher on that stock as well. And some of the PSUs that are coming onto the spotlight, be it the likes of Oil India, which is trading with gains of around 5.5%, and is Railtel 5% higher after the order winner. All of these railway companies have been winning orders recently. RITES won an order yesterday. Railtel has won an order today. But it was a subdued second half of the year for the Nifty, and all through 2024, Bernstein kept warning about some macro risks, earnings risks so far. But they seem to have turned the tide on Indian equities. Why is that so? Rima is here to tell us just that. Rima.
Thanks so much for that. So Bernstein, in its strategy note, is crystal gazing into this year. And they say, and the key headline is, India has bottomed out and it's time to start buying selectively. They're saying growth may pick up only in 1 or 2 quarters, but investing ahead of the recovery is suggested, though they do acknowledge some risk remain to consensus FY26 earnings. The Nifty year-end target price is 25,600. Which is a 12% return. Small and mid caps, yes, are richly valued, and therefore their best case is they will only track the index return. Downside, according to them, seems to be limited, and therefore it's time to selectively start buying.
Okay, all right, Rima, thanks a lot for that. Well, IT stocks as well are in focus on the back of fresh brokerage notes. Rima, you're a busy lady. Tell us about those.
So let me start with CLSA, where they titled their report Improved Macro Outlook. For Infosys, they're expecting a little bit of a guidance upgrade. The current guidance is 3.75 to 4.5%. They're saying the lower end now becomes 4.25 and the upper end becomes 4.75%. Even for HCL Tech, from the current guidance of 3.5 to 4%, they expect the lower end to be raised, so 4 to 5%. Also, the rupee depreciation, the sharp rupee depreciation acts as a tailwind, and therefore EPS estimates have gone up by nearly 3%. On Wipro, we're getting a mixed call from brokerages. So CLSA today has downgraded Wipro to a hold from an outperform rating post the recent outperformance. Their target price is 303. They expect the company to remain a laggard in Q3. The company is likely to report a flat revenue growth, and they say the next leg for Wipro to re-rate, because valuations have already re-rated for Wipro last year from about 19.7%, it came to 24.5%. So re-rating is done, but from here on, for Wipro to move, earnings will need to perform, and for that, at least as of now, Wipro catching up with industry growth rate, that seems to be elusive. But Nomura is bullish on Wipro, and it's one of their top picks in the large cap space. So Infi and Wipro are Nomura's top picks in large caps. In the mid caps, they like Coforge. In small caps, they like eClerx, and they've also upgraded L&T Technology Services to a neutral on the back of its valuations. Back to you.
Very interesting, right? CLSA had issued a double upgrade on Wipro in July. 6 months later, they've downgraded the stock, and during this period, the stock has moved only 14%, and they say that the outperformance of the stock is the reason why they have downgraded it. The last 1 month, the stock is up only around 2.5 or 3% But sticking to the IT space, earlier we spoke to Nimesh Chandan, who is the Chief Investment Officer at Bajaj Finserv AMC, who shared his outlook for 2025, and they are also overweight on select large cap IT names. And let's listen into excerpt of that conversation.
The underweight that we have in some of our broader based funds is mainly mid caps and small caps. We are overweight on a couple of large cap names, but we are underweight on mid caps and small caps purely because of valuation. Next year will be good for IT, but I think much of it is already priced in. And if there is any slight negative in terms of higher visa costs or maybe some restrictions there, that would impact these smaller players and mid-sized players a little more. So optimist about IT, but more towards larger players compared to, again, here the smaller players there. Avoiding MFIs for now because they're still going to see some kind of regulatory changes coming in, and that could put pressure on their business and their margins.
Well, shifting focus to some corporate conversations, then earlier today we were joined by Hitesh Oberoi, the Managing Director and CEO at InfoEdge, to discuss hiring trends and their top 3 priorities in 2025. Listen to what he said.
Now IT hiring is back to growing in double digits or close to double digits, and the non-IT hiring piece is still sort of doing okay. So yes, we should target growth in the teens going forward. Certainly things are beginning to look up for entry-level hiring across all levels. And, so my sense is it's only a matter of time before things get back on track. Of course, the economy has to continue to do well. One, of course, like I said, we will continue to ramp up our AI investment, and especially in the core Naukri business. And that will help the Naukri business grow faster over time. Second, we are working on our blue-collar job board. We started monetizing Job Hai, 2 quarters back, and we're getting decent results. So we will ramp up our investment in the blue-collar job board, Job Hai, next year. And thirdly, 99 acres and Jeevan Sathi, we worked very hard on these 2 businesses. They are now almost breaking even, and we want to try and make them profitable next year, and of course keep growing them rapidly as well.
A percent higher is InfoEdge, 8,800 on the stock now, but interestingly, the stock was up 69% in 2024, and since 2011, it's only once that the stock has given negative annual returns, which was in 2022 when the stock fell almost 30%. But since then, it's been a one-way move for InfoEdge. But the other stock that's not having a good day today is Petronet LNG, and that is because Citi has put a sell rating on the stock. But more importantly, there are some regulatory concerns surrounding the stock as well. 6.5% lower now on Petronet LNG. Upasna is joining in with more details on that. Upasna, tell us more.
While Citi has given a sell rating on the stock with the target price of 310 per share. Now, recently, PNGRB has called for a regulatory framework to bring regasification activity under its purview. The regulator believes that this is a crucial step to ensure fair pricing, transparency, and efficient utilization of LNG import infrastructure. Now, regulator has called out Petronet LNG for profiting immensely at the cost of gas consumers. Now, Citi is of the view that the latest move clearly introduces a meaningful regulatory risk for the company. Together with increasing competition, Citi believes that this adds to the uncertainty on the sustainability of companies' historically strong pricing power. Hence, Citi has gone ahead and opened a 90-day negative catalyst watch on the stock.
Upasna, thanks a lot for that. Nearing the lowest point of the day is Petronet LNG, 325 on the stock, 6.5% lower there, not having a good day at the office. A detailed explainer on why the stock is down is on CNBC-TV18.com, so you can catch that as well. The time for a short break then. Jay Thakkar of ICICI Securities joins in to tell us whether the Nifty can get to 24,000 today and what next after that, along with some trading strategies as well. Stay tuned.
Welcome back. Well, keep an eye out on a few stocks actually from the broader markets. Reliance Infra, the last few days, the stock has seen a very, very strong up move. It had a good run. And then from there, Reliance Infra did see a sharp correction. But now that stock is pulling back, I think even in the last few minutes, just take a look at that. Today, it was a little bit lower. Yesterday, I think it was up close to around 3.5–4% or thereabouts. And just in the last few days, last 1 month, the stock is up close to 20%. But if you pull up a longer time frame, you'll see that, in fact, the stock went through a correction and then it bounced back up. Well, let's tell you about the F&O markets then. And today, remember, we have the weekly expiry that will play out. One notable factor that the markets are not able to run away today is that the Nifty Bank is relatively underperforming. Nifty Bank is more or less flattish, while you have close to around a 1% gain on the Nifty itself. And why is the Nifty up? Well, one factor that's playing out is there is some short covering that's taking place. Because the Nifty is up and you have the open interest as a little bit lower, signs that there is some short covering. On the options front, Well, earlier this morning, we had told you there could be a strategy at place, and that strategy could brace for a close between 23,500 on the downside and 24,000 on the upside. That's a broad 500-point range because there's a short straddle in play. Now I'm taking a closer look, and there are two strikes that are very active. One is the 23,900 put, and the Nifty is now 50 points above that level. The rough premium over there on an average could be around 75 rupees or thereabouts, which will get to the support zone in just a bit. But on the upside, you also have the 23,950 call. That as well is fairly active, and the premium today has close to have doubled. So to put those premiums in and to give you the broad levels, the support comes in at around 23,825. Why do I say this? Because the rough premium on the 23,900 put was roughly around 75 rupees. Currently it's 60 rupees, but on an average could be closer to around 75 rupees. So that's why that will be the crucial support zone. Resistance though comes in at around 24,000 odd. I'll tell you what, if we can trade above that, even 20 points above that 24,000 odd mark, we could see a big short covering bounce that could play out because shorts are stacked in the system, volumes are relatively lower, and the larger domestic hands could want to push this market higher. So that will be important to track. Stocks that are seeing fresh long addition, that is the stocks are higher, and you see open interest build up as well, quite large. You have JK Cement, Tube as well as Oil India, all of them are seeing a good up move with good amount of open interest build up. However, on the flip side, you have that brokerage note on Petronet LNG. So massive open interest build up, it's up more than 15-20%. And Union Bank as well is seeing a big surge on that front. So that's the action, Hormuz. I'd like to see us build on from here on. This market is still net short. You have the Nifty that's surging away to around this 24,000 odd mark. And it seems that the bulls, they have a trick or two up their sleeve, because when the cat is away, the mice are at play. Lower volumes, good chance to push this market higher.
Well, the bulls are listening to you. It definitely seems that way because just as you mentioned, 24,000, the Nifty is just at that level now. A percent higher, 250 points on the Nifty heading back to 24,000. But can it sustain there? Jay Thakkar of ICICI Securities is joining in to answer that question. Jay, good afternoon. Thank you for joining in. We are back at 24,000. We have made multiple attempts to get past it. Couldn't do that before. Can we do it this time around? And couple that up with your stock recommendations as well this afternoon.
Hi, very good afternoon to you, Homaz, and very good afternoon to you, Nigel. Well, the probability of an upside from here on is definitely quite high. I mean, what Nigel rightly pointed out that, yes, the short straddle yesterday was quoting at around 250. And hence the range was definitely 24,000 to 23,500. And now what's interesting is that it's almost near to 24,000 levels. So, and we still have almost half a day still pending. So I think that the probability of 24,000 getting taken off and market gaining further momentum from here on is high, because one thing is that Nifty Financial Services has seen good amount of put base. So financial services stocks or index is quite positive. In fact, there is a good help from Bank Nifty and Reliance, if at all, from here on, from the point of view of short covering, mainly on Reliance. Then I think that Hormuz can help Nifty to close beyond 24,000 after long, almost after 2 weeks or so, and then it will be heading towards 24,150, 2,200 immediately to fill up that bearish gap, which is quite visible on the daily chart. So the stance is positive, at least until 23,800 levels on closing basis is held. We can see 24,200 immediately Hormuz. That is what is my view. Hence, I have a couple of buy recommendations on my list. So the first buy recommendation is on ONGC. This is plainly from the point of view of short covering. The stock is trading at around the levels of 242. Placing a stop loss below 238, one can go long on ONGC from the point of view of short covering in oil and gas segment. And that is where we have seen good amount of shorts as well. So that's a buy, and one can target on the upside 250 to 256 in the short term. The second buy recommendation is on Tata Motors, and I believe that here too we have seen a lot of shorts. Now auto is back into action, and Maruti has led the rally. But then I think that Maruti and M&M, in fact, M&M is almost close to life high beliefs. Tata Motors should also witness the short covering, as we have seen a positive divergence coming there. So 755.56 is where it's trading right now, Hormuz, and I think it's inching towards the levels of 800. So one can buy for a target of 800 on an immediate basis, placing a stop loss below 740.
Jay, thank you very much for sparing time and joining us today with your views on the index and specific stocks as well. Jay mentioned Tata Motors. There are 3 stocks on the auto side that are leading this charge. They are in top gear at the moment. Maruti Suzuki is one of them. Mahindra & Mahindra is the other one. We spoke of Eicher Motors at the start of the show, and also chipping in today's session along with that is well, these are the three names actually: Eicher Motors, Maruti and Mahindra & Mahindra. These are the three at the highest point of the day are all these auto names. Time for a short break. We continue our coverage of the markets and specific stocks on the other side. Stay tuned.
The power of short covering. Just pull up the intraday chart on the Nifty. The Nifty has moved to the high point of the day. The 24,000 odd mark has got taken out. I'll tell you what, we can hold around here. We can have a very, very big day. And the Nifty Bank, I think that deserves special mention. So if you just pull up the Nifty, maybe you pull up the Nifty Bank as well. If you could split the screen, just take a look at that big move that we're seeing on the Nifty Bank. Massive move is what we're seeing out there. We were just talking about it doing a relative underperformance. Well, it's gone up in style, and now, in fact, it's moving higher. Hormuz, I don't know whether we're very, very close to any crucial technical levels on the Nifty Bank, but maybe we could pull up the 20 DM. That's a distance away. So 51,300 is what we are at on the Nifty Bank. And the entire last 60 points has come because of the Nifty Bank's up move. And that's the power of short covering that we're seeing. So let's see whether or not we can hold on to here. But the bulls will be very, very happy if the Nifty can hold above this 24,000 odd mark. Given that it's an expiry, the shots could be taken to the cleaners, Hormuz.
Just yesterday, just this morning, we were talking about the fact that the Nifty Bank has taken support at its 200 DMA for 3 days in a row now at that 50,500 mark. And more importantly, it closed above the 51,000 mark yesterday after recovering from the lows. And that is also aiding the move that you're seeing on the Nifty Bank.
You were
today.
saying something in Chartbuster. Someone is back today. What was that, Hormuz? I would like to hear it.
I just told you at the start of the show that the markets are cheering your return to the newsroom. But yes, just before going into the break, we were talking of auto names, and they are also moving in top gear on the back of their sales numbers. And Rima is joining in with all of those details. Rima.
Thanks for that. So let me start with Eicher Motors, where the Royal Enfield sales numbers, at least the wholesale numbers, are much better than what the street was anticipating. And sales were led by a strong jump seen in exports. So the total sales went up by 25%, exports went up by 50%, and even the domestic sales were higher by 18.5%. But that said, the Vahan data seems to suggest that the retail sales outlook is still a bit muted because December registrations are down 4%. Ashok Leyland's domestic December sales also ahead of street expectation. Total sales have gone up by 5%, and MHCV has been strong, led by trucks. Now, Maruti and M&M are the other two stocks where you are seeing continued buying from yesterday. So yesterday, stocks rallied 2 to 3% on strong numbers, and there is follow-on buying. So for Maruti, just to recap, the key positives were the recovery in small cars and even exports. Citi has put a target price of 13,500 on Maruti, while Motilal Oswal says that Maruti is their top pick in the auto OEM because it's a play on rural recovery and valuations are attractive. M&M too continues to see buying. For M&M, tractors and passenger vehicles, particularly the SUVs, have done very well. Citi's put a target price of 3,520, and they say another good harvest season could be a positive driver for the stock, and tractor volumes could get a fillip. Back to you.
Indeed, Rima, thanks a lot for that. Earlier today, we spoke to the management of Maruti Suzuki to discuss the key markets that contributed to their sales growth in December and also on their order trends. Listen to what they had to say.
This has been our record sales month. We did more than 2.52 lakhs retail sales in the month of December, highest ever in the history of Maruti. I think all our cylinders fired, be it the hatch segment, be it the MPV, be it the SUV, van segment, every segment fired. Being the market leader, our endeavor has been that how we can make more and more people upgrade from a two-wheeler to four-wheeler and provide him the joy of mobility by offering him very innovative finance products, doing some sort of new limited editions. The Dream Series editions has been the one which we are doing for the last 3-4 months. Rural is around 48% right now, and urban is 52% for us. The Maruti exhibition, in which we are not going to showcase only the product, but we are going to showcase the overall ecosystem, what we are going to provide for the electric vehicle. We being the market leader, we feel we need to be technologically agnostic. So we are going to be present across all the technologies, be the EV, be the strong hybrids, be the CNG, biogas, flex fuel. We are going to present across all.
Well, we also have a chat with Bajaj Auto's Executive Director, Mr. Rakesh Sharma. Let's listen in to some of the key excerpts from that conversation.
Demand does cool off, and we would be reading too much in a month where which is almost like July and December are almost dead months. To pick up data from just those months and try to extrapolate that would be not correct. The year-to-date growth in the industry is about 8%, and I'm talking here of motorcycles, not two-wheelers, because two-wheelers also includes scooters, and we track motorcycles. So the year-to-date growth is 8%. If I take the full season, which is which starts actually in September, in the sense that there is a low period in September, and then I compare it with like for like, there has been an 8% growth in what we call September, October, November kind of a period. We expect that year on year we have been growing at about 20%. Quarter two onwards, I think quarter two, quarter three. We expect to clock a similar growth rate over last year. So that's the outlook. Two-wheelers turned in another 36,000 unit month, and that following on the 36,000 November, Nigel, as you pointed out, is confidence building about the immediate future. But, having said that, I must point out that this was the peak season, and let's see how January, February, March hold out, but I would expect that to be tad lower. We are now clocking about in November and December, about 6,000 to 8,000 units, 6,000 to 9,000 units of Freedom 125.
Well, time for a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC TV18's all-new app, where you can get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app from the Apple Store or the Google Play Store right away.
Bazooka move is what we're seeing on the Nifty, currently up close to around 320 points, and bulk of that has happened in the last 1 hour or so. So we're built on to those gains, and as we told you earlier, the Nifty Bank has taken off. Talking about banks though, CSB Bank, that's gaining after reporting a very good showing in quarter 3. Abhishek joins us to help us out with their operational update. Abhishek?
Well, Q3 has been very strong for CSB Bank, given the fact that their business momentum has been pretty robust. Deposits have grown by 22.2% YOY and about close to 5% sequentially. The term deposits are up more than 17% YOY and about 5% sequentially. But the loan growth momentum has been pretty robust. The advances have grown by 26.5% YOY and about 7.6% sequentially. In this, the gold portfolio has grown robustly. So the gold loan book has grown by 36.3% YOY and about close to 8.5% sequentially. So the gold loan share has taken up or has increased to about 45% versus close to 41.8% on a year-on-year basis and about 44.7% sequentially. The CD ratio, or credit deposit ratio, has inched up to 86.55% versus 83.6% YOY and about 84.4% quarter-on-quarter, and this augurs well for the net interest margin holding up at elevated levels. Back to you.
Abhishek, thanks a lot for that. Almost 4% higher is CSB Bank. But moving on, from metros to tier 2 and tier 3 cities, India has been experiencing a live music revolution. Now, in 2024 alone, the country has seen a massive pickup in its concert culture. And Vinny took a look at how India's concert economy is shaped up last year and what could be in store for 2025.
India is hitting a new high note. Literally, from metros to tier 2 and tier 3 cities, the country is seeing a booming concert culture that's not just thrilling music lovers, but giving the economy a rocking boost. So let's dive in and look at the numbers. 30,687, that's the number of Book My Show offerings of live events in 2024, which was spread across 319 cities. This is an 18% growth in India's live entertainment consumption business. Think of Bryan Adams, you have Dua Lipa, AP Dillon, we have Pratik Kuhad, Diljit Dosanjh, and many other K-pop names. Also singers like EXO's Chan, GOT7's Bam Bam from the K-pop world in 2024. And that was just the start of something big. And hold on to that playlist of yours, because in 2025, the stage is set to get bigger, louder, and more diverse with Coldplay, Ed Sheeran, you have Shawn Mendes, you have Green Day, and even the K-pop girl band Blackpink, and many more in 2025. Not only that, 123% of fans have opted for premium experience at this live events. Now wondering why the sudden surge of concerts, you ask, right? Let's rewind back and go back to the pandemic. After years of being stuck indoors, people are hungry for experience. They want to go out. They want something more than just your music playlist on your phone. And they are willing to spend big for these concerts. But concerts aren't just about good music, right? It's much more than music. They are an economic powerhouse for any country that is happening in terms of concerts, whether you look at it in terms of hotels, flights, logistical companies are racking it in on the concert business. Take this now, for Diljit Dosanjh 2024 tour, flight bookings for Chandigarh jumped as much as 300% on a year-on-year basis. Now, when you're looking at it for Coldplay's Ahmedabad concert that's going to be happening in 2025, Mumbai flights saw a staggering jump of 355% surge on a YOY basis. And it's not just flights. Confirmed ticket data shows that train bookings for Mumbai ahead of the Coldplay concert that is going to be happening has spiked 842%. That's right, you heard that right, 842%. Hotels are packed, restaurants are bustling, local transport, that's also thriving. And this is not just about metro cities. Indore, Chandigarh, Lucknow are also joining this concert circuit, bringing Tier 2 and Tier 3 cities into the spotlight with metro cities. In 2024, Tier 2 cities experienced a jump of 682% in growth of live events, including markets like Kanpur, Shillong, Chandigarh, signaling a democratization of the entertainment industry and access across country. Now, what's the total economic impact of this, you suggest? Let's look at some of the budget estimates that you have for these concerts. Concerts could generate as much as 1,600 to 2,000 crore rupees in just a few months. Now, ticket sales alone, according to the budget estimate of this, is 750 to 950 crore rupees, and hotel transports, food, sponsorship, and we are looking at the whole shebang at the culture and economic phenomena that this is actually creating. The experience economy is here to stay. Globally, events like Taylor Swift's Eras Tours have coined in terms like Swift economics is what it's called, boosting of GDP of the countries, whether you look at US, UK and Singapore. Now, India's version may still be warming up, but with artists like Ed Sheeran, Blackpink, Coldplay, A.R. Rahman drawing massive crowds, we are definitely stepping into a global stage. So whether you're vibing to the Cigarettes After Sex concert in Bangalore or you're cheering for Coldplay under the Ahmedabad sky, one thing is very clear. India's concert boom is not just music to everyone's ear, but across the globe, and music lovers and economy alike will see a boom.
Music to everybody's ears indeed. Vinny, thanks a lot for that update on India's concert economy. Time for a short break. On the other side, Manisha Gupta joins in with Atul Chaturvedi, the chairman of the Asia Palm Oil Alliance. Stay tuned. Back on the other side.
Welcome back, and joining us on the show now is Mr. Atul Chaturvedi. He's chairman at Asia Palm Oil Alliance, and he joins us live now. Mr. Chaturvedi, hi. Thank you so much for joining us. This is wishing you a very, very happy, prosperous 2025. And going on to palm oil prices, then, I mean, it was quite a movement and volatility that we saw in 2024, especially the second half. If you look at the prices report card, while we've declined 11% in the past month, but the year 2024 actually gained up by 25%. One, how do you see this volatility? And two, with the kind of correction that we've seen in prices, do you see it becoming favorable oil yet again for India?
Manisha, a very, very happy 2025 to you and your colleagues in CNBC.
Thank you.
Now, coming to your question on palm, my take is there's a saying in the northern India, "Hum to doobenge sanam, tumko bhi le doobenge." In fact, as a matter of fact, what we are seeing is the cost of diverting close to about 40% amounts to something like anywhere between 15.5 to 16 million tons of palm oil. And this, at this point of time, they're losing something like about $350 to $400 per ton. In totality, this would amount to a sacrifice of about $5.5 to $6 billion. So that's a massive, massive money, which is being taxpayers' money, which is being pumped into diversion. Now, at the same time, what has also happened is they've given a lot of trouble to the rest of the consuming countries, India being one as well. So palm oil, which used to be the cheapest oil in the world, is now having the tag of being the costliest oil in the world. So it is now getting reflected in consumption pattern as well. If you look at the December numbers, in December, India is importing about close to roughly about 12.5 lakh tons. And palm, which used to be about closer to 9 lakh tons a month, is now down to about 4.5 to 5 lakh tons. So, and soya is gaining ground big time. And that's largely because soya now is available anywhere between $125 to $150 cheaper than palm, which is actually a reverse story. So my take is the Horeca segment in the country is now gradually shifting or reducing their consumption of palm. And palm used to be one very big sector of this Horeca. That we are seeing a diversion from palm to cotton oil. So all these
But Mr.
things would
Chaturvedi,
mean-
for the month of November and December, we might have seen this trend change. But would you say that India is a very price-sensitive country in that sense, and we really don't care what oil we are eating until the time it's cheaper?
Absolutely, absolutely. More so during the winter months, when palm oil has a tendency to harden, Indians generally prefer soft oils. But maybe February onwards or March onwards, when the weather starts improving, you might see some improved offtake in palm. But at this point of time, my take is that palm, with this pricing scenario, what India would need is just about what is the core demand. And the core demand for palm could be anywhere between 4.5 to 5 lakh tons. So my take is, going forward, palm has to become much more rational than what it is. And we are seeing that happening because they are losing market share big time. I was in Singapore till yesterday, and what we are hearing is that the consuming countries are definitely pushing more for soft oils, and palm is becoming a loser.
Okay, so it's not just India then.
India
how
seems
would,
to be.
Oh, absolutely. How would you look at the prices going forward then? I mean, we've seen 5,500 on the higher side. We're trading around 4,500 right now, still on the higher side as compared to previous year. So what's your sense? Where do the prices need to come before India starts going back into its demand?
No, palm has to reach a reasonable level, which if you look at soybean oil today, CNF India is about 1,075. Palm is at 1,200, and this is after the fall in the last couple of days. So palm has to fall another $150 before it starts getting serious buying interest from India. So I think the writing is on the wall. And mind you, it is going to be a very painful 40% blending as far as the Indonesian taxpayer and Indonesian economy is concerned. So I think there's some, maybe, who knows, there could be some little bit of a rethink on increasing the blending from 35 to 40%. And palm oil losing share, I don't think the Indonesians are going to be liking that.
Oh, sure. Well, absolutely. Mr. Chaturvedi, thank you so much for joining us and making sense of what we've done in palm in the previous year, how it's impacted the Indian oil economics, if I can say so, and where the prices need to come to see those demand numbers yet again. Thank you so much again for speaking to us and throwing light on what really it means for the Indian edible oils, palm sector in sense of consumption. Well, with that, that's all the time that we have on the show. Thank you so much for watching. After the break, Business Lunch will take all the action forward.